Role and functions of RBI. The Reserve Bank of India undertakes numerous activities, all related to the nation's financial sector, encompassing and extending beyond the functions of a typical central bank. To highlight, they are as under monetary authority, issuer of currency, banker and debt manager to government, banker to banks, regulator of the banking system, manager of foreign exchange, maintaining financial stability, regulator and supervisor of the payment and settlement systems, developmental role. Monetary authority. Monetary policy refers to the use of instruments under the control of the central bank to regulate the availability, cost, and use of money and credit. The goal of a monetary policy is to achieve specific economic objectives such as low and stable inflation and promoting growth. The main objective of monetary policy in India are maintaining price stability, ensuring adequate flow of credit to the productive sectors of the economy to support economic growth, financial stability. In order to achieve these objectives, RBI's framework is based on a multiple indicator approach. This means that RBI monitors and analyzes the movement of a number of indicators including interest rates, inflation rate, money supply, credit, exchange rate, trade, capital flows, and fiscal positions, along with trends in output based on policy perspectives. RBI uses several direct and indirect instruments in the formulation and implementation of monetary policy. Direct instruments. Cash reserve ratio. Reserve Bank traditionally relied on direct instruments of monetary control such as cash reserve ratio and statutory liquidity ratio. Cash reserve ratio indicates the quantum of cash that banks are required to keep with the Reserve Bank as a proportion of their net demand and time liabilities. In terms of Section 42 bar 1 of Reserve Bank of India Act 1934, the Reserve Bank having regard to needs of securing the monetary stability in the country, prescribes the CRR for SCBs, scheduled commercial banks, without any floor or ceiling rate. Reserve Bank does not pay any interest on CRR balances maintained by SCBs with effect from fortnight beginning March 31st, 2007. Penalty for non-maintenance of CRR. In cases of default in maintenance of CRR by SCBs, penal interest is charged as under. In case of default in maintenance of CRR requirement on a daily basis, which is presently 95% of the total CRR requirement, penal interest will be levied for that day at the rate of 3% per annum above the bank rate on the amount by which the amount actually maintained falls short of the prescribed minimum on that day, and if the shortfall continues on the next succeeding days, penal interest will be recovered at the rate of 5% per annum above the bank rate. In case of default in maintenance of CRR on average basis during a fortnight, penal interest will be levied as envisaged in subsection 3 of Section 42 of Reserve Bank of India 1934. SCBs are required to furnish the particulars such as date, amount, percentage, reason for default in maintenance of requisite CRR, and also action taken to avoid recurrence of such default. Statutory liquidity ratio. It is share of net demand and time liabilities that banks must maintain in safe and liquid assets such as government securities, cash, and gold. SLR prescribes the amount of money that banks must invest in securities issued by the government. The value of such assets of a SCB shall not be less than 5% of its total demand and time liabilities in India as on the last Friday of second preceding fortnight, as the Reserve Bank may specify from time to time. Following are the assets in which banks are investing for maintaining SLR. Cash or gold valued at a price not exceeding the current market price, or investment in the specified instruments which will be referred to as statutory liquidity ratio securities. Penalties. If a banking company fails to maintain the required amount of SLR, it shall be liable to pay to RBI in respect of the default the penal interest for that day at the rate of 3% per annum above the bank rate, on the shortfall, and if the default continues on the next succeeding working day, the penal interest may be increased to a rate of 5% per annum above the bank rate for the number of days of default on shortfall. Refinance facility. Sector specific refinance facilities are provided to banks.